update. Rana Gupta is with our Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you very much for your time. I just wanted you to talk about the indecent situation, not indecent and what to do with the stock. But as a long-term sort of money manager, how do you kind of sort of look at things like this, which happens occasionally in finance companies more often than elsewhere? Do you think, a credible private sector person at the helm is what it'll take to bring confidence back, and that's essentially the only thing from here?
The lending business where you get tech deposits and they lend money, the importance of the management team is extremely important. And yes, I think a credible person with a considerable private or public sector experience will help restore the credibility. And basically, I'll make 2 points. The lenders who has a higher cost of funds, they, in order to generate a certain target ROA, ROE, invariably go and lend to the higher riskier segments. And the riskier segment in tough times, there's a little bad asset quality. It's important to recognize the pain and clean it off rather than pushing it away through any restructuring or any accounting methods. I think that has now come to the surface. So I think that's a very important point. And secondly, in recognizing and letting investors know about what's going on and raise capital if necessary, those are all prudent steps, which I think will restore credibility of any financial institutions. Because after all, there is a big opportunity in lending to, let's say, rural India, lending to SME. But I think over-aggression on certain banks front, chasing yield on certain, in cases, will result into this kind of troubles. But this can be fixed.
It can be fixed. Well, investors are hoping it gets fixed, and we don't have to, keep looking at sudden pieces of news of this nature from the bank. But anyway, good to have you on the show. Thank you so much for joining in. I just want to get your sense, Rana, on financials overall. I mean, what are you buying here? Because even with large cap banks, this quarter has told us that growth could be a challenge, though asset quality is okay, credit cost is coming down. But it's all about growth. So do you like banks? Are you looking at insurance companies? Are you looking at capital market institutions? What do you like in BFSI?
So the financials, we like the entire space. Okay. I think given the way even the global setup is, whereby we are seeing dollar declining, emerging market currencies, and the rest of the world catching a bid, it is good for the liquidity environment. It's good for the central bank like RBI, who has maintained prudent policy so far, also to inject more liquidity and cut rates. So I think the credit growth, it is weak right now. It will probably remain weak for the first quarter or so. But we expect a good pickup in H2 of the current financial year. And I think that growth, because of that, we like most of the lending institutions, including top class private banks, as well as the large non-banks. Non-banks, although I think the result they said that not much scope for margin expansion, but I do think there will be some margin expansion playing out in the non-banking segment as well. The credit quality, I think, is still quite okay. Of course, microfinance and certain unsecured small tickets are a bit of a problem. But again, it's a pretty localized problem. We do not expect it to be a generalized problem. We also like the financial services segment, particularly insurance and capital markets. And the way the sectors that we like there, if you basically the aggregators, the distributors, I think companies like who are aggregating and selling insurances, the companies like who are offering wealth management services, they are, I think, a very good and clean play on the rising domestic savings and investment into insurance and capital markets. And this is going to be a pretty long-term structural play.
Hi, Mr. Gupta. Good to see you. And in fact, look at the way BSE has rallied. That's one of the financialization listed themes as well. Valuations going out of whack, but the street believes there's a long runway. So let's see how that goes. But Mr. Gupta, let's talk about this China plus one theme. Let's talk about some of these fancied sectors, the EMS plays. Everyone's building in that India can take some part of that share from China. Do you believe so? EMS, chemicals possibly. Or would you play this theme?
In terms of China plus one, I think the long-term theme of multinational corporates diversifying out of China remains intact. And this theme started not now, this theme started some time back and will continue to last for a very long time. Progress will, of course, be gradual because relocating supply chain or developing new supply chain takes a lot of time. So in that context, I think the sectors that we still like for the longer term in this segment will be the electronics, EMS, electronic manufacturing services sector. I will also additionally add pharma, CDMO. That is one sector that we like. I will also add textiles. Particularly in the context of the new FTA signing that has happened, I think textile is also one sector which can look very, very interesting from a medium to long-term perspective.
Got that. CDMO, EMS, textiles, these are all areas that you are bullish on. On the EMS thing, I mean, would you play any heed at all to these comments from President Trump yesterday about, not that the EMS industry is largely dependent on Apple. I mean, Apple, for example, the largest player, Dixon, has no exposure. It's all Android. But would you pay any heed at all to these comments?
Well, I think, the EMS industry, Apple is selling all their US, the iPhone they're selling in the US, they're sourcing it from India. And it took them quite a while, I think 5, 7, 10 years to do so. Although Apple has promised, significant investments within US, but, start producing Apple phone from day one is not easy. There is a huge component and huge supply chain that is required. Setting up that takes a long time. That is why I think it is only fair for these larger companies to have diversified supply chains. I think over a period of time, they will develop something in US also. That could happen, but that does not mean that India will not get its share. For example, we talk about Apple shifting production out of China, but that's probably 20-25%. Their mass scale, their production in supply chain in China still remains, and they continue to produce and sell to the rest of the world. This supply chain removing and establishing cannot really happen overnight. It takes 5, 7, 10 years. So while that comment is important and maybe a guide maybe into Apple, but it'll take a long time for them to set up something in US.
Talk is cheap, as they say, right? but that is what it is. In textiles, you're talking about apparels, or could you? Is there a subset here, or you own a bunch of them, Rana?
Yeah, textile is it's an emerging theme in the sense, the stocks are not very large and liquid in that space. But typically, we are looking out apparel exports out of India. And given the advantage that India might have in terms of tariff differentials, India has a good chance to gain market share in that segment. And also, as we are aware that the other main apparel and garment exporters, those countries face certain challenges. So I think both in all put together, it is quite possible that India can gain market share in this industry.
Okay, so that's apparel. It's another area in focus. Markets down about 0.25%, so it's a bit of a cautious morning, 60 points lower at this juncture. But mid-caps continue to fly away. 0.5% up on the mid-cap index. Cochin Shipyard, by the way, reported numbers yesterday. That stock's continuing to find more traction. Though I think on the margin, it was a bit of a miss. But anyway, the market's mood is very different on defense stocks of late. So this is what we have going. Crumpton, like Prashant mentioned, still looking good. Kalpataru projects, 6% higher. Data patterns, Zentech. So, defense is still a very, very strong theme. Rana, speaking of defense, it's really been the theme of this week, right? The index is up some 9%, the Nifty Defense Index. And the stocks all of them are just literally touching the sky. I don't know, do you already have some exposure here? Or if you don't, for those who don't have exposure, is it too late to now jump on the bus? What's your advice?
I think within industrial space, there are two sub-themes that we like. One is, of course, we just discussed the electronic manufacturing, and second is defense. Defense is more because of import substitution, and defense we would prefer some broad-based plays. If one is buying a particular company targeting a particular segment, that will go through its own ebbs and flows and huge amount of volatility. For us, it's very important to get the returns but also manage the risk. So that's why I think it's we would think someone who is diversified has exposure to a number of segments where the investments are happening. Because let's be very pretty clear, I think rising defense expenditure and more localization, it's not just in India, but it's a global theme. So I think we would continue to see that going on. And our take would be that buy the one who is more diversified, or rather look at the one which is more diversified and has exposure to multiple segments. That is to reduce the volatility, but also get the long-term uptrend.
Okay. All right. Got that. Ran, thanks very much for joining in and giving us a perspective on the market. You have a good day and a good weekend as well. Thank you very much for joining in.